want more money? Dominic, get me some money in US preferably, or in other currencies. It doesn't matter. The filthy lucre, that's what we're talking about. How are things overnight on Wall Street? The war has affected things, no doubt, but how did it look overnight?
No worries, Darren. The normal things happen when there's a war. Markets fall a little bit. We saw markets also in the US weaker on concerns about poor job numbers in the US and the rising oil price. The Dow Jones Industrial Average fell nearly 1% to 47,502, and the S&P 500 was 1.33% lower at 6,740, with the Nasdaq giving back nearly 1.6% to 22,388. Across the Atlantic, London's FTSE also dropped to 10,284, with the French, German and Italian bourses also lower. Gold rallied almost 2% to $5,180 US an ounce, and West Texas Intermediate was 12% higher to $90.73 US a barrel. The Aussie dollar was steady against the greenback and is currently buying 70.25 US cents, with the ASX 200 SPY 156 points lower, pointing to a negative start on trading on Monday following yesterday's effort, where a market dropped 1% to 8,851.
Okay, so I mentioned at the start of the war there, and you reckon that the effect is there straight away, the initial effect, but the market over the last 12 months has still been fairly buoyant. But is it a small blip on the radar, or does it continue? What happens?
Well, no one really knows where the bottom is, but it's called buying the dip. Now, if you're contrarian and kept my money invested in cash, keep a little bit of a war chest for a rainy day, I think it's starting to rain. And whilst the recent falls have been around 2.5% to 3% over the last month, let's say, the markets are still remarkably high, most of them. The Dow Jones is nearly 11.5% higher. The S&P 500 is 17% higher. The Nasdaq's nearly 24%. London's FTSE's 18.5% higher. Italy's MIB is nearly 14% higher. Japan's Nikkei is nearly 51% higher the last year. And our own ASX 200 is pretty good. It's 11.3% higher. Some are not faring as well. France's CAC is down 2.7%. Germany's DAX is break even. And Denmark has been hit quite hard. It's 23% lower. But buying the dip is a difficult thing to do, and it's not for everybody. And it requires a lot of courage. And an experienced investment advisor can help explain how it's done, because it's the amount you put in and the timing of it, which no one can get right. If anyone says they can, they're lying. And at least if you decide to have a bit of a go, use some of your war chest. You know, everybody's pretty clever these days. They're pretty well informed. You don't go too hard. If you use a balanced approach, an investment advisor can buy the dip for you and take the stress out of the process.
Yeah, good stuff. There's one stock that I've always been fascinated with, and I got fascinated once he bought back R.M. Williams from the Chinese, and that's Twiggy Forrest and Fortescue. And yeah. I followed them across the recent times where they dropped down to around $15, and I thought, oh, gee, this is a good time to buy. And I didn't have any money for a start to buy them, but I watched them, and sure enough, they went up to about $22, $23 recently, but now they're down to sort of $19.25 at close of trade, and I'm still interested in them. But you just don't know whether to buy or whether not to. It's a hard skill to know, isn't it?
It is, but let me say this: had you bought them at 23,
yep,
you'd be, and they're now down to 19. You go, gee, that's a shame. Even if you bought them at 23 and you held them for 5 years, they're going to be worth more. So the question is, how much more profit are you going to make if you're buying the dip? And the answer is a bit. So I would suggest that if you like the stock and you've studied it, I mean, they paid $45 billion in dividends, I think, over the last 20 years.
Apparently they're really good on the dividends, yeah. Yeah,
and that's, people love them. And Twiggy's an interesting character. He's a bit like a gecko, I think. He changes colour, I think, depending on what's good for him and his investors. But look, if you buy a little bit at $19.25, I think the close, which is down not much. You know, it's only down 14% from yesterday, and it was probably down $1 last week, I think, from memory. So if you buy that modestly and you don't put all your eggs in one basket and don't mortgage out, that's a sensible thing to do.
Yeah. If you'd like to talk to Dominic, talk shares, talk investment, talk wealth creation, he's the man. Give us a ring, 133 693 Alafaci, collinshouse.com. Call now and you'll get straight through here on 3AW. Dominic, do you get clients that come to you and say, look, I've always wanted an art collection. I want to go self-funded super, and I want to buy some really expensive paintings. Do you ever get it, or coins or other, collectibles that they'll think go up in value?
I have, and we generally talk them out of using a self-managed super fund because the rules have been changed and they're just ridiculous. But owning good quality art and collectibles can be quite a buoyant activity. It makes you feel good. You can see the art and enjoy the coins or whatever other collectibles that you have, as well as enjoy the benefit of increasing prices. Some of them increases can be tax-free, depending how you structure yourself. But generally, we don't recommend that you use a self-managed super fund for that, because you're not allowed to look at it or touch it or get any benefit if you buy it in a self-managed super fund, other than an arm's length benefit. You've got to keep it in a safe or store it somewhere else.
Yeah, for sure. Have you worked out recently what you think? I mean, that if we knew the date we're going to right on ahead, it would make life so much easier. The game is working out when you're going to need money until. And if you knew the answer to that, like if I had a year to go, it'd be easy. I'd be saying, oh, yeah, I've got enough money. But you just don't know, do you?
Well, it's interesting you should say that, because there's a publication that the Australian government does. Let me just look it up here. It's life expectancy table. So let's say, let me just get it for you. If you're a 70-year-old person, I'll get the exact number in a minute, they can plot the average person. So of 170-year-olds today, 50 will be alive and 50 will be dead in, say, 12 years. Let me just get that right figure. They've moved it, the little rascals. So there is a guide. Now, you can't tap on the door and say, I want my money back because I didn't live that long, because you'll be dead, firstly. But essentially, you can look up the actuarial guides and they can help you look at the statistical life expectancy, and it doesn't mean not everybody's as lucky as the next person, but life covers, here we go, I've got them here. So these were done just recently, and a male aged, say, 70 has 16.32 years. Half of the men aged 70 will still be alive and half won't. And if you're a female, it's 18.6 years nearly. So as you go up the scale, let's say you're 75, well, half the people your age will be alive in 12.62 years, and if you're a female, half the females alive, who are 75 now, will be alive in 14.5 years. And the longer you go, the number never stops. Like, even when you get to 100, half the people will be alive in 2.37 years if you're a male, and 2.49 years for females. They don't go past 100. So let's say you're a younger person, you're 55, you've got around a 30-year time expectancy if you're a female, 31.92, and for a male, just under 29. So whilst we don't know when we're going to croak it, Darren, because life's like that, you can look at the table and say, well, the average person lives this long.
Interesting stuff. Dominic, enjoy the long weekend, won't you?
You too, DJ.
We'll do it all again. All you have to do is look up collinshouse.com, click on Contact Dominic, and you take it from there, don't you?
Thanks, Darren. Appreciate your help. Bye-bye.
Good on you. Dominic Alafaci, as we approach 10 o'clock.